Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. It's been a while since I posted a video. It's the start of 2025, and sort of one of my New Year's resolutions is to get more content out to you guys on a regular basis. So be sure to subscribe to my channel if you haven't already, and hit that notification bell so that whenever I post a new video, you'll be notified of it. So, what I want to talk about today is, when markets move very fast in a short period of time, you often get these reversals like you could see here, right? Reversed here, reversed here. What is it in the order flow? Is there anything in there that can give you clues as to a potential reversal about to take place? Because, we just made a new high here, and then we started selling off. You got your first leg down, you pull back, and then you start selling off, but then you reverse right here. You go up, pull back, go up, pull back, make a run up to this high, and then you reverse off this. Is there anything in the order flow that could potentially clue you into a reversal? Now, sometimes people think that order flow is going to give you every single market turn in the market. Honestly, I wish it was that simple, but sometimes, there's different things happening in the order flow, and there's something that I call an imbalance reversal that I've talked about for a long time, over a decade. It was actually one of the first tools that we put in the Orderflows Trader software, the footprint software, to spot these reversals. And in the old days, I just used to sit back, watch a footprint chart, looking for something to happen, and then trade off of it. All right, so this is your basic footprint chart. Now, this is the Orderflows Trader software that I developed, and this is just a basic volume footprint, bid volume, offer volume, and point of control, as well as your delta numbers on the bottom. Now, sometimes, getting to what an imbalance reversal is, well, it's the result of a market that moves too fast in too short a time period, and it basically becomes overextended. And when that happens, you often get a nice little short-term reversal. All right, so let's just go back to some of these quick reversals. All right, so here's the first one, right? We made a new high, made a new high, made a new high, start coming off, we pull back up here, and then we start selling off. But when we get down here, the market reverses, right? And then you get this nice big green up bar, with a lot of thin volume as the market is reversing up. Now, what causes an imbalance reversal? Well, it can be seen in a footprint chart. When you have a red candle after a move or a green candle after a move. But more importantly, what you want to see is on a green candle, if you're looking for this market to reverse, what you want to see is selling imbalances towards the bottom of the bar. Okay. What's happening is the market's running into liquidity, and at the same time, the aggressive trading is drying up. Right? Because, as the market's coming down, you can see we're coming through liquidity here. We get 31, 25, 16, 16, 22. Market pulls back up, starts coming back down, taking out this little swing low here, 26, 17, 25, 26. Comes down here, meets more liquidity, 30, 32, 44, 16, 12, 12, 14, 21. But what is the obvious thing that sticks out here? Well, you've got selling imbalances here, okay? And the candle's green. So you got to be thinking, okay, I got selling imbalances, which is bearish order flow, right? Because you have aggressive sellers selling into passive buyers, right? You can see on this move down here, right? Selling imbalances, 2 in this bar, 1 here, 1, 2, 3 here, 1 here, we got another 3 here. But then in this one, you got 2 and the market reversed. So you have a combination of the market running into liquidity and the last sellers selling. Okay, you even got a little tail, order flow tail taking place here with the 0, 0. So the market pushes down here, and then the selling just sort of shuts off, right? The last seller has sold, the market starts reversing. That is something that you can trade, right? Now, obviously, you want to see the follow through order flow in the next bar, and then you get it really strong in the next bar. This market, as soon as this bar closes, next bar opens up 76. Where we opened 76.40 and immediately trade up, basically $3 to 79.20. And the next bar, it goes even higher, right? So that's a quick move from, 76.60 all the way up to 81, 40. So it's about a $4.50 move right there. Very quick, right? And this market just became overextended. It left that footprint, quote unquote, in the footprint, so to speak, in the market reversed, right? Then we started going back up. Then we go sideways here, okay? And then we get up here, right? This green line is our high of the day, and we're pushing up near the high. And you have sort of the same thing taking place. You got buying imbalances. Well, I say same thing, but in the opposite direction. You got buying imbalances in this red bar. So, traders were very optimistic that, hey, we're going to take out this high at 83.90. See a couple buying imbalances here. Top of this green bar, you got some more buying imbalances. We do pull back a little bit, but the bar is still green, so it's still bullish in a sense. Price action is still moving higher. We go out, we take out those highs of this buying imbalance here. Then we get up here, we get within, 2 ticks of the high. Where's your buying? It's gone, right? I mean, is it strong liquidity up here? No, it's 6, 10, 19. So it's not like it's 110 and 190, but it's still, it is still a buying imbalance in the red candle. Market closes down in the bar, right? And then we get this nice little move lower, right? We trade from, the low of this bar. What is that? 82.40. We get all the way down to 80 right here, and then even further down to 79.30. So you had a nice what was that, $3 move right there. Then we start going sideways, and eventually we do go a little bit lower. But on our footprint chart, right, we do make it easier. This, like I said, I developed this Orderflows Trader software to help me see these things taking place in the order flow. We call this an imbalance reversal right here. So to enable it, you just click there. You could use a swing filter, which I'll get into in a minute. And there's something that's called the minimal imbalance reversal volume. I keep it set at 10 because, I want to make sure that the imbalance is, I don't say legit, but, meets a certain minimum volume requirement, because you could have an imbalance of, 4-to-1 where you have one contract against 5. And yeah, that is an imbalance, but it's kind of light volume. Okay, so that's why I have it set at 10. And then you just click apply. Okay, and what's going to do, it's going to highlight it here. This is a bullish imbalance reversal. That's the green. You can see here the 13 and the 13. Get this little pop up. Here's the bearish one that I just talked about earlier. You do get one here, but again, imbalance reversal, you want to move to have taken place to reverse, right? If you're just coming off from, 82.40, then you hit 81.70, that's not a move that's going to reverse. You got one here. There's a bearish one right here. So again, remember this is where traders get mixed up, is because they start to look at all instances of red bars with buying imbalances near the top or selling imbalances in green candles near the bottom. And that's not what you're supposed to be looking for. Remember, right? You're looking for the market to reverse. So for a market to reverse, you have to have a move take place. Okay. And you could have a swing filter, right? We've added something that's called a swing filter. You can see it right here. Swing period is going to be set to 5. That's my default that I use. But to enable it, if you just want to see it on swings, you click there, right? Enable swing filter. And it's just going to filter out when they occur in swings. That's why this buy is gone, right? Because it's not just, oh, there's a selling imbalance at the bottom of a green candle, I got to take it. No, right? You want to have a move to have happened. Now, this one is debatable because it's not coming in on a swing low, so that's why it's not showing. But if, as a trader, you got to make decisions. I know everyone likes to automate everything, and, you could automate it in the future, say swing low plus 1 bar, okay? But really what I like to see them on is moves that happen where the market gets overextended, and then it just leaves this sort of obvious footprint in the chart of what's taking place in the market. Okay, now let's take a look at another market here. It's going to be a little bit more clear. Okay, so this is crude oil, right? You got one just taking place right now as I'm recording this video, right on the low of the day. Okay, you think that's important? No, of course it is, right? It's the low of the day. You've got aggressive selling taking place down into the low. You make the new low, then you start reversing up and going higher. Okay, let's see if there's any others. Now again, here's a low, start moving up. Now remember, it's called an imbalance reversal. It's not called a imbalance momentum. Um, so that's why I like to use the swing filter, right? Because yeah, while this one did go a little higher, this one, went 2 ticks higher, you would have been stopped out. That's why, I advocate using a swing filter, right? You don't want to say, oh, I'm going to take this because it's got the selling imbalance there on the green candle. I got to take it, right? Or, take this short or take this short. Again, you just made a new low of the day, and you got a bullish imbalance reversal, a bearish imbalance reversal on the surface, right? Just on the footprint chart with the buying imbalance at the top, the selling imbalance at the bottom. Which one do you want to take? Well, you don't want to be getting short necessarily into a low. I think the best trades to take are longs off of the low, right? So what you do, right, clean it up, is you use the swing filter. Okay. Now, again, you could use whatever swings you want. 5 is sort of my default. You could use 10. You could use whatever number that you're comfortable with. Some people I know use 25, right? Then you just click enable swing filter here. Okay. So you see right here, right? There's your bullish one. Obviously, that one on the low that we just made is still going to show because that's the new low. Let's see anymore. Here's a nice bearish one. Okay, right. You see here, this is coming in around the 74. This appears at 74.60, right? We trade all the way back up to that price level, and then we, come off, start making new lows. But let's see if there's anything else. Here's another bearish one. Come right back up to that level, start selling off. Okay, there's one. Yeah, it just didn't work out that great. But I mean, that's how it is sometimes, right? Yeah, but ideally, you want to find them at swing highs or swing lows as opposed to just anywhere on your chart. Okay. And yeah, I don't need to go back so far. But you can see how this one is playing out right now as this video is being recorded. So anyway, guys, that is the whole concept of imbalance reversals. It's a great little setup. You could use it in every market. And, it's something that when I first started trading with order flow, that's something that I just looked for, right? I just focused on that taking place in the market, so whether you're using my order flows trader software, which in my opinion makes it much easier to see, or just using a plain old footprint, that's what you want to see in the order flow, right? That's something that you can do, you can use, you can trade in any market. So if you enjoyed this video, be sure to subscribe to the channel, hit the like button, leave a comment in comments below as well if you got some value out of it. All right, everybody, take care.